Hello everyone, this is Matthew Frailey with BreakpointTrades.com. Hope everyone has had a wonderful 4th of July. It is the weekend, so this is my comprehensive weekend market newsletter review. And as you know, I am Matthew Frailey. I founded Breakpoint Trades 22 years ago, way back in 2003, to provide advanced technical analysis, market commentary, trade ideas, and mechanical trading systems. If you're not a subscriber, definitely consider clicking that enroll button, subscribe. I think you'll love our service with our 5 detailed newsletters per week, dozens of actionable trade ideas, access to mechanical trading systems, active community, you name it. This is our backend recorder for our website subscription service, which I'm going to go ahead and start right now. Hello everyone, this is Matthew Frailey with BreakpointTrades.com. First off, I hope everyone's had a nice weekend so far and had a wonderful 4th of July. And again, even if you're not in the U.S. markets, we do have quite a few world markets or folks overseas as subscribers. So again, hope you've had a nice weekend as well. All right, again, this is going to be my very comprehensive weekend newsletter review. It's actually coming out on Saturday instead of Sunday. So hopefully, you should have plenty of time to review things. Trying to get these out earlier on the weekend instead of always on the Sunday evening. The newsletter here is divided into 9 major sections. Going to just, make some general comments, which I'm doing right now. I'm also going to talk about one of our rare mechanical systems took a market exhaustion short on Thursday. That's a rare system. It's just like it sounds. The market's exhausted itself, and so that's what it looks for. That condition's only triggered 10 times since 1995, so it's very rare. And we actually did see futures sell off on Friday when most of you are probably out playing, down about 40 points on ES. I'll talk about that later. Our KISS systems have done exceptional, so subscribers to that have done very well. I've also added a new section to the newsletter, and I'm going to add this to the website eventually, called Matt's Macro Plays or Matt's Macro Setups or whatever. So trying to decide on the name, get that in a minute. Then we're going to look at the general market review. We'll look at also bonds, various indicators. We'll examine a few select sector charts. We'll look at commodities, in-depth currencies, US dollar, Bitcoin. We'll look at precious metals, gold, silver, platinum, GDX, mining stocks, and finally going to review some recent trade ideas. I didn't add any new long setups because, well, markets had quite the run, plus our exhaustion short mean reversion system triggered. Like I said, I hope everyone had a wonderful 4th. And as far as the market, like I said, we've had a heck of a rally here. Market's just been melting up. It's definitely climbed the biggest wall of worry I think I've ever seen it. And finally, a lot of, the public has capitulated and went into the market. And I expected the market to rally last week with the holiday, but now that has passed, I wouldn't be surprised if we see some sort of correction pullback, especially since that rare exhaustion short triggered. And as far as the news, we actually have a fairly light news this week. Last week, as you know, that big beautiful bill, I hate that name quite honestly, was passed. There's good and bad to it. The bad, of course, is all the debt potentially that it can add, unless they can add so much growth that it negates the debt. But still, ultimately, I think they need future bills to address the debt. We all know that is a major issue. Of course, it's not just a U.S. issue. It's actually a world issue. Everyone is awash in debt. I'm wondering eventually in the future there's going to be some great reset because the debt cannot be paid back. Again, I could make a whole 3-hour discussion on that. It's not the place and time to do so, but we're about the charts. As far as the news, despite the extremely weak ADP last week, that was extremely weak. It came out at negative 33,000 versus the expected 105,000 gain. So, boy, I was surprised to see the jobs market coming strong, and unemployment rate actually dipped from 4.2 to 4.1%. But that said, it's lagging, and I do expect eventually we're going to see that unemployment tick up. Maybe that'll be the cause for the next major correction, maybe sometime in the fall. Anecdotally, I continue to see companies lay off huge workforce, and the AI is taking over more jobs, etc. So, plus, here's another thing, guys. Let's be honest. The jobs report is always revised down later on. every month it's revised down. So how can you really take the current numbers that seriously when it's always revised down? Otherwise, for this coming week, a very light news week. NFIB, small business optimism. We'll see what that looks like. NBA mortgage, crude inventories, initial jobless claims, and Treasury budget. Steve Nelson is still out of town. He'll be back on July 8th. Okay, let's get started with things. So, first image below, item number 2. So here is, let's talk about the market exhaustion mean reversion system that shorted last week. So it actually took a short on both the SPY and ES futures. And I sent this trade notification out to subscribers on Thursday. Again, I don't know how many people took it. A lot of people were on vacation, cut out early. But if you took the trade, you're actually already up, because on Friday, that in the morning, futures were open till about noon or 1 o'clock. And ES futures were down 40 points. That's a pretty good pullback. But anyway, it triggered on both SPY and ES futures. I sent out the trade notification. I added the trade to the website. I personally took SPY puts, and I have some MES short futures. That said, guys, if you look at the chart here, there's actually 2 entries. So a couple reasons for this. Number one, I didn't actually see the short early in the week. And so we actually got a much better price on Thursday. That said, had I known there was a second entry on Thursday, I would have issued a larger or more aggressive short entry on Thursday. So instead of SH for the SPY short, I would have issued SDS, that's the 2X ETF. And for futures, I would have issued 4 contracts instead of 2. Now, why didn't I see this? It's kind of a nuance with TradeStation. So even though Thursday, as you know, the market was only open a half a day, it closed at 1 p.m. Eastern. TradeStation, for some reason, there's some stupid things about the program. The actual second entry didn't show up until 4 p.m. later that day, even though it was already closed. So very annoying with TradeStation. Apologize for that. There was actually a second entry. If somehow futures open up on Sunday or were up on Monday or early this week, I may issue that second entry. So we'll just have to see how things go. But otherwise, again, these systems have 100% winning trades. There's not a lot of trades though. It's a very difficult condition to hit. And so let's take a look at some past examples. So is the market going to, are we going to have a major top here and going to crater? I don't think so. History doesn't show that. I do think we're due for a pretty good correction, say in the early fall. But here's some past examples of this mean reversion exhaustion short. So I put them on the left, upper left, all the way down to the lower right in time frame. And this is just on SPY. I'm not going to show the ES futures. So you can see one, and the last one occurred in around March to April 2024. And you can see, produced a nice trade. Market bounced a little bit, and then it declined again. So it occurred right around where the market had about a month or 3-week correction. It basically closed out about halfway. It was in that trade for about almost 2 weeks. The trade before that was 2020, and looks like into August or early September. Produced a nice quick trade, but ultimately the market went down for a couple more weeks, had about a month-long correction. You could see simply ABC. Again, it wasn't, a start of a major sell-off. ABC, then the market resumed its uptrend, just like it did in 2024. Last trades before that were 2017 and 18. 2017, you can see it literally just produced a small pullback, lasted about a week and a half, and then the market just resumed right higher. So this moving average here, I think it might be the 20-day moving average. Can't really tell, but again, it was more just a shallow pullback, and you could see the market resumed. Now, that short that occurred in February 2018, that was actually a bigger top. The market actually fell about 18% there, but then it resumed to new highs again. But that was a pretty good correction there. 2012 was another one. It was a quick pullback, and then the market resumed right back, made a new high, chopped around, then it had a bigger sell-off later on. The 2010 trade produced a pullback for about a week or so. Price went down for another week, and then you resume that strong uptrend. And 1998 was the last one. produced a shallow pullback there. And then the market proceeded sideways in a choppy action. So you can see most of these trades are about a week or two long. Usually they don't occur near major market tops. Usually they occur in sometimes just a pullback in the strong uptrend. Sometimes they produce a bigger pullback like in 2018. But that just gives you an example of the history of this. So again, I'll keep everyone abreast of the system here this week. I'll have the newsletter since Steve is out of town. But so far, the trade is looking good with the action on Friday with the futures. Next, let's go ahead and move back to the general market newsletter. So item number 4 shows the index sector table, what transpired last week. You can see again, holiday week, market was up nicely, as you can see. The Russell outperformed, up 3.5%. Remember, that lagged for so long, so it's playing some much needed catch up. NASDAQ and S&P are up about 1.6 to 1.7%, while the Dow was up 2.3%. Every one of the market sectors here, we followed 21 of the sectors, were up for the week. And biggest sector was actually metals and mining. Oil services had a nice week. Banks have been on fire lately, up 4.8%. Currency-wise, the dollar still can't really bounce. Now, it did bounce on Thursday, up 0.5%. There is a big support zone that I've been showing. It's trying to find support there, so we'll see if it can do that. Cryptocurrencies, Bitcoin's been a little choppy here lately. For the week, it was choppy, as you can see, down slightly. Commodities, mostly to the upside, up 2.2%, with crude oil up 2.6%. Natural gas has been super weak, down 7.8% for the week. Otherwise, mixed bag here in the other things. Copper up, uranium down, agriculture down, corn, wheat up. Precious metals were strong. Gold up 2%, silver up 2.73%. GDX, the miners, up 4.3%. Platinum up 2.5%. Palladium up 0.5%. Remember, boy, platinum has had a hell of a run. I hope you guys bought this the last couple months when I preached the choir pretty much in every newsletter. That's a long-term idea. It's one of Matt's macro plays. And as far as the bond market, we saw a nice bounce in the 10-year, 30-year Treasury yield. We'll see if that Fed soon lowers rates. I think they hit it on it finally about a month from now, maybe, for the next Fed meeting. And item number 5 shows the economic news calendar. Like I said, a light economic news this week, which I already discussed these various items. But let's go and get started with the first part of the newsletter. So I've added this to the newsletter, Matt's macro plays. Now, Rick Kwan, you know him from the customer service. He thinks it should be Matt's macro moves, or MMM. Matt's macro setups. Tell you what, guys, why don't, if any of you are bored and you want to write into support, you have an idea, write into support, tell us which one you like, okay? Either way, I'm pretty good at maybe a few times a year, handful of times a year, picking out some sectors in the market, whatever, stocks, sectors, indexes that I think are poised to have major long-term reversals. And I've been pretty good about that. Platinum was one of the more recent examples that I talked about back in April and May, and of course it's already up huge. But so these are plays that, they're not just trades. You buy them and, you could potentially hold them for many months or, many years at times. So let's take a look at some of these. So image number 7 here is platinum. So again, I was preaching the choir on this back in March and April of this year, and you had this very obvious coil pattern. Back in late May, I finally put out a newsletter that discussed, not just the technicals, but I had this whole thing where I discussed all the macro reasons why, from, the imbalance of the supply and demand. There was something like 1 million more ounces for demand over supply, and that's existed for a couple years. You have all these shuttered mines, and commodities move on long-term macro plays. Plus, platinum is going to start used in more and more catalyst and battery tech and hydrogen technology and everything else. So I stated my case that was fundamental, but also based on the chart. And platinum has had a fantastic move here. Again, you can see match macro play. since April 2025. So if you bought this sucker in April, boy, you've had a heck of a move. I mean, you could argue it's quite overbought here short term. It definitely could use a consolidation, but long term, or nice consolidations are long term buying opportunities. But even if you just bought this for a trade for a couple months, you've had a fantastic trade. Chart number 8, here's the monthly view. Again, I loved this monthly chart. We were talking about this coil pattern. Actually, much of the year, it stayed within the coil. It's about a 4-year coil, 3.5-year coil. Major breakout from that coil last month. And it's up a little bit this month. You can see how the long-term moving average ribbon was pinched. It's curled up. Again, I think this sucker could go up, back to the upper 1,000 area, maybe even 2,000 over time. But again, it may need a consolidation here soon. But again, it's one of my macro plays since since April 2025. Next, number 9, here's palladium. Now, palladium is another potential macro play. I talked about it back in April, but this one hasn't had the move yet. It hasn't broken out. What it is doing here, it's basing. Okay, you can see we like these bases. It's basing here for a good year and a half. Again, it may still chop around in a base for a while, but I like these basing patterns. You could also call these stage 1 basing patterns. And you can see how the moving average ribbon's been pinched. It's starting to try to curl up here. So that's one I like. PALL is one of the ETFs. SBSW, I think, is a stock. There's ETFs, etc. Next, chart number 10, here is silver, another one of my macro plays. Now, I put this out in February 2024. All right, so a year and a half ago. And at the time, silver was in this coil pattern. You could see here. And again, it hasn't had a monster move out of that pattern yet, but it's moved up nicely. Again, this is still in play, guys, long term. I expect it to go up to this next area up here and eventually retest that 50 area and beyond. Chart number 11, here's the really big picture chart of silver going back to 1975. So again, this really shows you the bigger picture of silver. First off, if you know your history, silver hit $50 in 1980. Essentially, the Hunt brothers tried to corner the market, and they got their asses handed to them. They almost went bankrupt. The same Hunt brothers, the trucking company. I think that's maybe where they got some of the idea for that Trading Places movie with Eddie Murphy. When they had the Dukes try to corner the frozen orange juice market. Right? It's kind of similar, but this was a silver. And it was all the way not until 2011 when silver hit 50 again. Another major top. I think we're on course eventually to hit that again. And I think if we hit it a third time, then I think we break out. So silver is a macro play. But again, I put it out in February 2024, year and a half ago. Next, image number 12. Here's gold. So yet another macro play, match macro play. So I put this out since, this is actually the wrong date here. I put this out in the same time of silver. I put it out early last year, 2024, around February, March. I put a price target of over $3,000 on gold, and obviously that has more than been achieved. Now, it is quite extended here, very extended ribbon. RSIs are sky high. It is due for consolidation. This appears to be some sort of wave 3. So on a good correction, some sort of wave 4, then I'd be buying it again. But again, it's a macro play. Put it out a year and a half ago. Another one I put out was uranium. Now, I first put this out, guys, and this is the wrong date. Oh, no, it is. It's correct. I put this out in December 2020. So long-term Breakpoint trade subscribers know I put this out way back then. And the reason I put it out was because of some fundamental analysis, but also you had this beautiful long-term basing pattern that it started to break out of. Okay, I love stocks that are breaking out of a base. Anyway, one of my targets been for many years has been this for supply zone, which we actually tagged last month. But I still think this will continue higher. So again, here's a macro play that I put out 5 years ago, guys. Here's some recent ones. Chart number 14, LIT. This is the global lithium ETF. Technically, I liked this long downtrend line. Now, finally, it's breaking here this month. And there's also fundamental reasons for this. But I like the chart. So this is a macro play. Again, I put it out on June 1st, 2025, so about a month ago. By the way, we have this in the KISS systems area. We have a nice tradable system on that. Another one, now this one is more chart based, potential macro play. I put this out in mid-June. It's REMX, kind of sounds like a real estate company. I think a Remax, but it is the rare earth ETF, rare earth metals ETF. What I like about it technically, it's come down all the way to this weekly demand zone from 2020. You have a double MACD divergence here, and you're testing a kind of a wedge here. Moving average ribbon starting to pinch a little bit to the upside. Again, it hasn't broken, and it's possible this could still pull back within the wedge, but this is one I'm monitoring. I haven't entered a super big position in it yet. And anyway, so there you go. Some other macro stuff, and I didn't add it here tonight. I do think some of the world markets will start outperforming the U.S. markets, such as EFA, Europe, and emerging markets. So those are some other ones, guys. And remember, I've talked about those most of the year. All right, maybe I should have added those to here. But so those are some examples for those of you looking for some long-term setups. You work a job or you're retired and you don't want to be looking at the market all the time. These are ideas that you can buy and hold and not have to monitor constantly. Okay. All right, let's go and move to the next part of the newsletter, the market analysis. So image number 16. So here's the weekly view of the S&P. Like I said, up 1.7% for the week. Crazy rally off that demand zone, in April 7th, as you can see, and then made a new all-time high, 6,279. That said, we have a new demand zone here. This is important, guys, because now that's support. But when we eventually break demand zone, when we break structure, that's when the market is very vulnerable to a bigger correction. But for now, that's a support. Next. Chart 17, here's a bigger picture view of some of these wave counts. So clearly we're in this wave 5, which we've been favoring for a while, and we'll see ultimately how far this goes. One thing I'll say, guys, some other folks that I follow, one place they do some pretty decent market research on statistics, and they found that usually after market makes new all-time highs, a lot of times you'll soon get a 5% or so correction in the market. So it wouldn't shock me if we had something like that come soon. Okay, especially since that exhaustion short triggered. Next, chart 18, here's the monthly view of the S&P. It shows you the secular bull market that started in March 2009. You could simply draw a nice parallel uptrend channel. This has some various wave counts. We're working on a wave 5. Again, these are bigger picture charts, guys. Nothing to trade on short term. And here's the big picture one going back to the early 90s. Shows you the same thing. And one thing that's been a great guide is the 14 stochastic. When it's above 50%, you're in a bull market. When it falls below it, triggers bear markets. And that did a great job of identifying the tech bubble crash, the 2008, and even in 2022, and then it quickly went right back above 50. One thing I will say, guys, again, this is a long-term chart. We do have finally some MACD divergence setting up here and some RSI divergence. All right. Again, this is a monthly chart. So this could play out, but it may not play out for, a couple months. So just realize that, but it is starting to set up. Now let's move to the shorter time frames. Chart number 20, here's the SPY KISS system. So again, I like to show the SPY instead of the S&P cash because it's tradable. And smart trailing stop is 593. System would have went long on April 7th on that big up candle with an initial stop right at that low. You can see how it's moved them up all the time. And this also has this experimental mean reversion trades where in your main long uptrend, in the pullbacks, when the system is still long, it can give long opportunities. I'm still playing around with this, but I may eventually send these out as mean reversion trades. The beauty of these is they have stops. Unlike some of the a lot of the mean reversion systems that do not use initial stops, the stops for these, if they're wrong, are the smart trailing stop. Kind of like back here in you could see system went long, say in August last year, held it until March. And between that time, you had 5 winning trades, these mean reversion trades. The final one was a loser, but it simply stopped out with a smart trailing stop. So there's always an exit plan. You're not buying one of these mean reversion and like without an exit. You always have that exit. Next, image number 21. Here's the S&P cash, just for your note. Now, here's another version I've been playing around with. Smart trailing stop is 60.16 here. And this one actually has 3 mean reversion trades inside the long trend from April. Next, some of these custom indicators we like to look at with the ATR, the moving average ribbon, and some of these DeMarcs. So again, first off, ATR support on all the time frames, even down to the, say, 78-minute. On the 78-minute, we do have a DeMarc 13, so again, we are stretched, obviously. We have an A here in the daily. Now, what is an A? It's called amateur buying. It means volume is getting lighter on the uptrend. You know, just like you had one back here in May and you had a little pullback. So you don't always get a pullback from those, but it is something to note, and we have that DeMarc 13. Next, moving back to the standard chart. So chart number 13, here's the standard daily S&P. Again, remember this nested 1-2-1-2 count that I've had. You know, that pullback we had in June was a wave, fairly shallow wave 4 that held the 20-day moving average, as you can see. Rallied up, took out those highs, and we're now in the midst of this wave 5. Now, how far this wave 5 goes remains to be seen. Now, once this wave 5 ends, guys, you know, the final portion of that, we could have a pretty decent, like, ABC pullback. Otherwise, you have some open gaps here. Now, again, guys, unless the market were to absolutely something crazy happen, I don't expect this gap down here to be filled for a long time. But, you know, on a market correction, could we fill this most recent gap around 60.50? Sure. But also, again, first big support would be previous highs, which is now support. Next, chart number 24. Here's another daily chart of the S&P. This shows the parallel channel that we were showing. You know, we broke that slightly in June, but just had a shallow pullback. Now, notice after we made a new high, we're testing that middle channel line again. And conveniently, the market futures are down on Friday with that exhaustion short. So kind of funny how we're likely pulling back from here. So again, your big support would be previous highs, now support, and the parallel uptrend channel line. Next, chart number 25. Here's half-day chart. Again, shows you the same thing. You can see how that June correction, we had a simple MACD recycle. A lot of times the MACD on a divergence, if you don't produce much of a pullback, will recycle back to zero and bounce, and that's what it did. Otherwise, you can see all these open gaps here that could be hit on a really good correction. But we have a first gap here. You know, I wouldn't be surprised when the market finally starts to pull back that this one's filled at least. We are quite stretched. Look at the RSIs here. Look at the 14 RSI, almost at 80. Chart number 26, here's 60-minute view. Again, 60-minute view, there's a slight MACD divergence here. Here I noted some of the recent open gaps. You could actually see 2 of them here. 60-100, 60-50. And chart number 27, here's the 15-minute view. So mid last week I talked about this coil that I thought would break to the upside, and boy did it ever. And you had that big pop on Thursday, that half day, and then of course we sold off on Friday on the futures. Otherwise, let's see how this parallel channel holds coming into Monday. Next, moving on to the NASDAQ, chart number 28, here's the triple Qs, weekly view. Again, new all-time highs. Here's a new demand zone now, this boxed area. So on a nice correction, that is potential long-term support. Next, chart number 29, here's the triple Qs high performance daily KISS system. So new high on Friday. We did get a DeMarc 9 there, so that is definitely of note. You can see the last DeMarc 9, we produced at least a little pullback. Smart trailing stop is 526.59. This also has these mean reversion components on it. You can see 2 nice trades there recently. Next, chart number 30, here's the standard daily triple Qs. Again, new highs here. Now, we do have a little RSI divergence here on the 5 RSI. And we also have a demand zone down here below this open gap. So again, this horizontal line, which was the previous highs, is now support. Then you have the gap. Then you have a demand zone. Okay, notice we still have a pretty good MACD divergence there. It's been building for just over a month. Next, Jabber 31, 2-hour view showing these parallel channels. And you can see that gap. By the way, there is a little gap here from last week, though. Forgot to mark that. Next, Jabber 32, here's the 60-minute view. Now, I did mark that gap I just mentioned right here. So, honestly, on a pullback, that gap's likely a magnet. Then you got your demand zone here. And if you break all that, then you got another gap down below. But big rally from that nice little channel flag pattern from mid-June. Jabber 33, 15-minute view, just shows you the demand zone, shows you some of these gaps. All right, moving on. Look at a few of the major stocks. Jabber 34, NVIDIA. You know, NVIDIA has been marching higher, following our wave count that we've had in place for a while. KISS system on the website has been crushing it. It's been long NVIDIA. Most of this run up, and it's up substantially. In fact, I'm going to just take a quick look at that. NVIDIA. Yeah, so on the website, the KISS system's up 50%. There's actually two of them. One's up 50%. And let me bring that over here, guys, so you can see it. So one's up 50.6%, the NVIDIA 30-minute, and the NVIDIA 130-minute is up 46%. So great trades going there. Again, if you're just on YouTube, another reason to consider joining us. Next, Jabber 34, Microsoft, again, just continues to march up. Still holding that 9 EMA on a closing basis. Now, when it finally breaks that, that'll be a little break in structure, so we want to keep an eye on that. Good MACD divergence here. It's likely to do a correction here at any time. Next, Jabber 36, Tesla. We did get a nice bounce off the demand zone, and we did bounce off it once again last week. But to me, Tesla's got a lot of work. You know, there's the robo-taxi, yada, yada, but man, that's going to take a long time, guys. And, you know, Elon's got a big brand problem, not just with Democrats, but even Republicans recently with his spat with Trump. Anyway, he's got a lot of work to do. Tesla's got a lot of work to do. All right, moving on. Small caps, Jabber 34, IWM, weekly view. Big move up 3.5%. By the way, this is now a demand zone here in the boxed area. Below is a big demand zone that we rallied off of in April. Jabber 38, IWM small caps. So as you know, they're now into the supply zone that I've had in place for months. And if we get a pullback in here, you got a demand zone right here. You know, it kind of lines up with these major moving averages. All right, guys, so there you go on the indexes. Let's go ahead and move on. Let's look at a few of these indicators we like to follow. Here's the VIX. So the VIX was down on Thursday, as you'd expect. Really nothing new here. The VIX has been a little undercorrelated lately here, and a lot of times this occurs near little market inflections, sometimes highs in the market, like you could see back in February. You had the VIX uncorrelation, and that was right before that big sell-off in the market. Then you had some VIX uncorrelation back in April after that bottom. You had one in June. Then you had a little pullback. Again, it's definitely something to be aware of, and you know the fact that that exhaustion short triggered is interesting to me. Next, Jabber 40. Here's the S&P, and this is the CPC. That's the options put call ratio. Now, I'm using a custom session of this. This one did spike outside its Bollinger Band, so, you know, that's a little warning. Again, this is not perfect. You can see back in May it spiked outside the Bollinger Bands here. You had a little pullback for a week. You had a spike outside the bands in March, and that ended up being near that high. You had it spiking out back in February. That was near the high. So another thing I'm going to look at is the NYMO. That's the NYSE McClellan oscillator. It is outside its upper Bollinger Bands. Now, that can occur near highs as well. You could see in January, that was near this high before a little pullback. You had it in July of last year before that nice big ABC sell-off. Now, yes, you had it in April, but to me, if you're coming off of a major oversold condition, it doesn't matter that much. What it matters is when this occurs after the market's had quite a run like it's had now, or like it was back in, say, July of last year. So take notice of that. Moving to the bond market, chart 42, here's the 10-year Treasury yield, up 1.5%. Remember, it's been in this coil pattern for quite a long time now. And chart 43, here's the daily. Been showing this wedge-like pattern. Finally started to rally last week, rally to the top of the wedge. So if rates push up, that would be a reason to spook the market, especially if this wedge, it breaks out of the wedge here. And chart 44, here's high yield corporate. Now, high yield corporate tends to be a leading indicator for the S&P, as my comments state here. So this is led up, and the market has certainly followed it. I don't really see any negatives here. It's still very, very strong, just overbought. If this starts to pull back, though, that would be a reason for the market too. All right, let's review some of the important market sectors. Not going to review all of them, just some of the important ones. Here's XLK Technology. Again, just like the NASDAQ continues to move up. Very strong. You do have this MACD divergence that's been developing for a month and a half. Here I added some of these gaps to move. Oh, there is a little gap too from last week right there as well. All right, you can see it. Chart 46, XLC communication sector. This contains a lot of those FANG type stocks, so we always want to watch this. It's been very strong. Still looks okay for now. This area, previous resistance, is now big support. That 105 area will be a support on a pullback. Chart 47, semiconductors has been marching higher here as well. Chart 48, XLF financials, beautiful break out of this coil that I was showing. You can see how you had to move an average ribbon pinch. Again, this has been a super strong area, and I think they're talking about reducing some of the bank requirements, so that's why they've rallied. So here's the bank sector, and boy, this has been vertical out of this pennant-like pattern. Look at that move. Quite extended, though. Look at the RSIs, so in need of a pullback sometime soon. Chart 50, here's XLI Industrials, new all-time highs here. Chart 51, consumer staples. This has been more choppy, okay, kind of in the midst of a big coil-like pattern. Tends to not follow the market as much, tends to be kind of a defensive sector a lot of times. And chart 52, home builders. Remember I was showing a coil a week ago, broke out of that coil nicely, okay. And chart 53, XLE Energy, or XLU Utilities. This has been fairly strong recently, kind of coiling right now. And chart 54, Energy, XLE. It did hold this uptrend line. Remember, it pulled back near that gap, and you know when we had the ending of the Iran-Israeli conflict, that obviously could produce that nice pullback. But it's still sort of uptrending here. And let's go and move into the next part of the newsletter, commodities. Here's DBC. Remember, big sell-off at the top of this channel. That also coincided with the Israeli-Iran conflict ceasefire, and then pulled back to the middle of the channel. So otherwise, technically, it's been in this channel here for, 2.5 years now. Chart 56, here's the daily chart. Again, held that support on the pullback. Again, you can see, besides the news reason why this pulled back with Israel and Iran, it was technically set up here with this doji, and then you got a bearish Morningstar candle. Otherwise, we've almost filled the gap now. Chart 57, crude oil, same thing, but a big sell-off. It moved up with the Mideast situation and dumped, but it held this area, which was previous resistance, but once broken, as you can see, has become support. Chart 58, natural gas, been kind of weak here. It's trying to kind of hold in this area, but natural gas tended to be choppy in the summer, so not surprised. Chart 59, DBA agriculture down 1.7%, so it's been weaker lately. Still holding this 50-week moving average for now. This was by the way, a macro play I called back here in 2024 as well. You could also consider this a macro play out of this cup and handle. Had a nice move. Chart 60, here's the daily. It did break the 200-day moving average of the previous week. That is now potentially resistance. Next, chart 61, Bitcoin. Bitcoin is just slightly up over the weekend here, but still kind of chopping around this area, around the channel. After this ABC pullback, had a nice rally. By the way, this is a demand zone right in here. Chart 62, there's another view. Again, it did nice rally off the demand zone, though, in June. We put out as trade ideas some of these crypto mining stocks, which has had a heck of a move. Wolf was a great trade out of here, great volume. On a pullback, light volume consolidation, it'd be a buying opportunity. Jarbor 64, WGMI. Look at this puppy moving out of here. This is one of our favorite crypto miners. Hell of a move out of there. Jarbor 65, Cipher, another crypto miner. Look at this puppy. Man, and just beautiful volume. Look at the volume on these suckers. Congrats if you caught some of these puppies. Now there is a little supply zone right in here. You can see it pulled off of this area. So again, it's had a heck of a move percentage-wise. Hope you took some profits. Moving on, US dollar. US dollar weekly view down 0.4%, but remember, we're in this weekly demand zone, so we'll see if it can start to find some support in here. I know the dollar has had one of the worst starts in history this year. The dollar was right into that supply zone in early January, and it's obviously got nailed from there. Jarbor 67, here is the daily chart. We have this MACD divergence building, but have yet to produce any meaningful bounce. Okay, so we're still in this tight downtrend channel, and ultimately it needs to reclaim the 50-day moving average here. Jarbor 68, here's UUP, that's US dollar ETF. I like this view. It shows this big support where we're attempting to bounce, but again, we haven't, it needs to take out resistance levels, stuff like that, to really confirm a bottom. And moving to gold, Jarbor 69, here's gold in the daily, little pullback on Thursday. Again, we either put in a blow-off move at 3,500 and we're not going to make new highs for quite a long time, or we could be forming some symmetrical triangle here that eventually breaks to the upside. Time remains to be seen. Now, just chart-wise, it would generally favor an upside break, but again, we'll see which way this goes. Jarbor 70, here's gold on the weekly. Bounced off this weekly parabolic line. So again, wave 5 either at 3,500 or 30, or it shifted. Remember, one of Matt's macro plays from February 2024. I called it back here when it was in this long-term base. Hell of a move. Next, Jarbor 71, silver, has been holding up very well here. You can see recently the 920 MA squeeze. Again, above in the macro MAT plays, I already discussed the longer term views of silver. Next, Jarbor 62, here's platinum, which I already discussed in the MAT's macro plays, but boy, platinum has had one hell of a move here. Big rally on Wednesday, basically a little double top there. Was probably an area to really consider taking some profits, especially if you're shorter term guys. It pulled back on Thursday. It's still holding that 90 EMA, but this move short term can't sustain itself. Eventually, this is going to need a good correction. First support on a break of that 9 would be the 20-day, and then maybe even the 50 over time, and then I'd be a big buyer once again. Jarbor 73. Oh, here's the platinum gold ratio. I haven't shown this for a while. In that video I did a couple months ago, I was showing how this was buried. You can see that ratio's come up nicely, but it still hasn't broken the channel. Next, Jarbor 74, some of these gold mining stocks. Here's Goro, still holding up well or breaking the coil. Jarbor 75, SILJ, that's the silver junior miner ETF. Remember, broke out of this kind of cup and handle pattern about a month ago, pulled back, held that as support. It's trying to bounce again. And finally, guys, let's review some other recent trade ideas. We've had some awesome setups here. Here's DNA. Now, DNA was an absolute textbook setup. It broke out of this coil. I missed the break on that, by the way, but I pointed out, hey, watch the back test of the coil. That's your super low risk entry. Why? Because your stop can be very, very, very tight. And that was an excellent textbook entry. Again, black candle here on Thursday. RSI 14 overbought, so I'd be taking some profits if you haven't done so. But this was an excellent, just textbook setup on that back test. Jarbor 77, Cracker Barrel was a cup and handle. I mentioned also a week ago to put a swing stop at that higher low, and it's moved up nicely. Jarbor 78, TXG, little tight bull pennant that broke out. Also had a back test if you missed the breakout. Remember, those are your low risk setups. Nice pop last week to the 200-day moving average. Chart 79 CLSK also popped last week. A little pullback on Thursday. Chart 80 CRML was just a doozy. We had pointed out this coil pattern, basing pattern in early June. In the 1.55 area resistance. I mean, this thing more than doubled. Chart 81 QTRX. Now this one's been meandering higher, but still looks decent to me. Nice volume patterns. Chart 82 BBAI. It's an AI play. Look at this beautiful pop out of this little tight coil. Little extended now, but heck of a percentage move. And chart 83 COHR Ascending Triangle had a breakout, back test. So you could have bought the breakout, you could have bought the back test, or both. All right, guys, we'll see how the market futures open on Sunday. The weekend betting futures seem pretty flat at the moment. So again, those are just people guessing. So we'll see how things look on Sunday futures. And again, appreciate everyone on YouTube. It really helps me if you subscribe, if you comment, and if you like. It pushes the YouTube algorithm. I don't make any money on YouTube, really. I make like a couple $100 here and there, guys. It's pitiful. And really, it's my only form of advertisement. So please subscribe if you haven't done so. Like, comment, share it with folks. And that'll do it. All right. Have a wonderful rest of your weekend. Take care.